Yo, greeting. Hope you're all good. This is Mr. President Wonga, right here. We're doing our weekly analysis for the week starting from the 17th of July to the 21st of July. So this is our weekly analysis. We're looking at the high probability setups that can possible help you in terms of, trying to make sure that with analysis, trying to make sure it gives you some of the trade ideas that we're looking at this week. But before we generate an idea, I always like to take a look at what is going on in that week. So we're gonna look at the economic calendar, just to see what some of the events that are coming up next week. So those events are basically, uh, they help in terms of generating a trade idea. Remember last week? We're looking at CPI and we're like so close into it. Reason being, because we're gonna have another federal meeting on the 26th of July. So it's something people are looking at. Remember also every first Friday of the month, we always check out the NFP. And I've mentioned before that the reason NFP they move the market is because it is released early in the month. So that's why NFP they move the market. Otherwise, gonna take a look at last week. Last week on a Monday, we had the governor of Bank of England speaking. Remember, they also have a hike on the interest rates that side. Also, the FOREX earnings show a little bit of growth in terms of people, the earning percentage, which is good because people are looking into that. And then we also had some numbers. The sentiment in Germany, a bit of a negative. And then we've also had, there was no change on Wednesday in terms of interest rates in New Zealand, which is good for consumers, uh, but it's still a bit high for my take. And then another thing on Wednesday we saw was the CPI numbers on from USD, which basically means inflation is basically cooling off, which means the rate hikes are actually working because the role of a central bank is basically pushing the inflation to be lower. Lower inflation or specify that goods not so expensive, like before, which is good for consumers, but it's also good for the fact that we won't be getting a hike anymore because with the hike, obviously when the hike happens, what you normally see is that the currency where there's increased interest rates is good for investors. People that are buying a currency with the high interest rates, chances are, not chances are, they're definitely gonna get a high interest rates, high interest when they buy that currency or invest in that currency or save in that currency. That is a good thing regarding interest rates being high. For consumers who are buying things on credit, it's not so good. So because we saw that number, this was the headline. Remember, some of the news are not, they don't get some of the big media coverage. If people on radio talk about inflation, people on TV talk about inflation, if you've got newspapers talking about inflation, if you've got social media page talk about inflation, remember, because there's a lot of coverage around this data or economic data, you're definitely gonna see a lot of movement around. And also because of the season we are in, we're looking at the hike, and also because there's been a lot of talks around that we are in the starting of a recession. So because of that, also season in the economy. Remember, economy, what happens is you've got the risk on, risk off. You've got also that's expanding, meaning it's a growing, and also you've got the recession during the expanding economy. That is where you're going to find a lot of people getting jobs, people getting paid higher wages or higher income. You're going to see a lot of building permits. You're going to see a lot of retail sales because people have money, so they're able to buy. But in the economy of recession, a lot of people are looking at the hikes. A lot of people are looking at the GDP numbers. What are they saying? So that is why basically you're more likely when you're looking at the certain figures in terms of economic data, some don't move at the economy that much. Look at this on Thursday, we had GDP numbers, the manufacturing production, that is a month on month. When you see MOM, it means a month on month. So that is a month on month. There's a growth in production in UK, and also the GDP numbers which show the economy, and then you've got the month. change, and then you've got the year on year, meaning it's gonna show last year, you're gonna compare last year to this year, but these numbers obviously show there's a bit of growth in the UK economy, which is good. And yeah, those are some of the numbers for last week, and you're gonna see some reaction that caused those movement on the charts. Okay. And then next week, look into next week, you've got on Monday, China production GDP coming through, expecting some growth in China. Remember, China basically is a country that does a lot of wood exports. So they definitely produce and give and sell goods to other countries. So is that country, okay? Then you've got retail sales month on month in the US, core retail sales. Obviously, that also we've mentioned before. Um, Retail sales where the retail sales buy things from the manufacturers, and the retail sales show people are buying for money. People buy one for two reasons. They buy because of the season it's in. Maybe it's a season when people are getting a lot of money, or it's a season of spending like December. Maybe some holidays or something is happening that side, maybe like a World Cup or something along those lines. And also people buy obviously when they've got money. And then obviously retail sales they don't really necessarily move the market that much because of the data that is coming through is definitely very late. Okay, then you've got NZD CPI and GDP CPI. Those ones are definitely gonna make some move. That is on Wednesday. Okay, building permits. Yeah, and then you've got crude oil inventories, and then on Friday, employment change. That's definitely gonna move the market on 3:30 and AUD. Otherwise, let's just take a look at the charts, what is going on within the charts. Then we'll explain basically my expectation, and then what we'll do is I'll share uh, the higher probability setups. Okay. I think yesterday we ended up here, when we're doing the weekly analysis. Okay. First thing first, I always like to take a look at the USD because USD is one of the most stable economy and also because one of the powerhouse in terms of economy. Let's just use a 1 hour. I've mentioned before, not just mentioned before. Let me just do this, okay, so that people won't be confused. We're not. Okay, so this is Friday. Okay, this is Thursday. This is Wednesday. Remember, I mentioned before. On Wednesday, there was this economic data that was released for inflation, showing inflation is cooling off. So this was a big drop in the USD raising in where there's inflation cooling off, it means number one, risk is on, and also it means the Fed will not be hiking, potentially Fed will not be hiking rates. So this is good for equities, your indices, your SP 500, your Nasdaq, your US state is good for that. It's also not so good for the currency, which is USD. People start selling off USD. And also, this is also good for gold. If inflation is cooling off, it's also good for gold. And also, it's also good for buying other currencies that are risk on, like your AUD, GDP USD, that are inverse of USD. Okay. So this is Wednesday, this is Monday, and then this is Monday, this is Tuesday, this is Wednesday. Okay. So on Monday, we saw an M within from that base. I've mentioned before, Monday opening. Always remember when the market is gonna drop, it's first gonna go up. But here you can see this is going up and then obviously moving to the side, moving to the side. And you can see it now, it's starting off from the low. Okay, so what you do is we're gonna mark that. I always like to switch from this line from the normal chart to line charts. Okay, so I'm expecting this movement to the previous base. So what I'm gonna do is gonna use the Fibonacci to measure. So I'm gonna take this to that low. Okay. So my expectation is that this will definitely react to this. So this is Wednesday where we have the biggest drop. Okay. And what else I do is I always check the 50 between 60. So I'm expecting before a further drop, this should test this level, which is 50 and 60, before a further drop. Okay. Let me just change it back to this. Okay. So expectation, this can drop a bit to this level and then can go right there. Okay. So this is Just zoom in, and then let's remove the Fibonacci because I'm checking for the 50 and 60 level. What's going on there? You can see this was the Wednesday where actually there was a bigger move. So I'm expecting the market to go back to that zone before doing a further drop because that is where there was a big selling off. You know, the market in the place where there was a big selling off, chances are it would come back and sell again in that level. Okay, because the big banks, the hedge funds, they like selling to the level, to the almost similar level. Okay, so yeah, so that's it. So let's just zoom in. So I'm looking at the candlesticks. This one, yeah, I'm looking at this level. Okay, you can see. So this here, okay. So this candle, I'm looking at that candle. That is a hammer. After that candle, you can see there was a break, which means there was a huge volume of buying here. So buying, breaking this level here, this level one, two, broke that level, close above, come back, expecting the market to come back to the similar level, and more buying again from that level. That buying obviously might just be can react here, and then I'm expected to get it there and then obviously drop. Okay. That is USD CHF. Expectation on USD CHF. Let's go and look at another pair. We can just look at USD CHF, Euro USD. Okay, we're gonna start off by looking at higher time frame. Mentioned before, we always look at the base, always look left. So looking left, you can see this here. Yeah. So this is another bigger, if you don't know, another bigger pattern. Okay. Let me just change this back to the line chart. Okay. I'm gonna mark the low and I'm gonna mark the high. Already the high is marked. Okay, perfect. Okay. You can see before that even bigger move, there was a bit of here, which is your compression, which is putting up liquidity. Liquidity is basically accumulation. Some people call the accumulation is pulling orders on the buying side and also on the selling side. What do I mean? Because of this movement here. See this movement. So when the market touches the level, people start selling. When the market touches the level, people start buying. This level, people start selling. This level, people start buying. And if you mark that with the horizontal line, you move it, you can see those are key levels. So you've got resistance here, and then another resistance here. If you change it back to candlestick, you can see, okay? You can see there's liquidity here, okay? There's pins touching liquidity, drop, touching liquidity, then drop, touching liquidity, then drop. Another pin, up, up there. So one, two, then dropping up, no, moving up, I mean. So there was this year is compression, but because of this pain, you've got people that were selling here. They've got their stop losses right there. Stop losses, they're in this zone. Okay. So because you've got that, meaning if you wanna build liquidity before dropping, you wanna go out there and grab it and then make a drop. Okay. So I like this pattern where the market move a compression, it just go up and down, and then and then break to the upside. Okay. One, two, and then go to the upside. Okay. Because of that, that is basically a zone, which I call it drop, and then this is a base, and then a further drop. You can see. So I'm expecting another drop in this level here. Okay. So what I would do is, remember we've marked that USDCHF is gonna go down, then go up. So I'm expecting this again. Let's just go to the hour time frame. So I'm expecting this. If you do H4, okay, it's not showing much. Okay, 1 hour is fine. Expecting this to go up And remember again, also it's the same story. It's the same story even here. Okay. So this is Friday, 14. This is Thursday, and then this is Wednesday. So I'm also expecting, okay, let's just do this. I'm also expecting Euro USD to just first, before a drop, perhaps it'll react to whatever level, or not react into maybe this level, they'll do some reaction, you know, and then make a drop. I'm expecting them to enter another big buying at this level, you know, more buying opportunities here. Okay. Last week we don't have much in terms of USD fundamentals. But sometimes there are some things that are not planned, like your disaster, war, so they happen. And that's what I'm expecting this to drop. But in this level, I'm expecting another bullish movement. So meaning potentially here. Okay, I'm expecting that this pair to drop onto this level. And in this level is we're expecting big buy orders to come in. Okay. Yeah, and I like even the fact that if you look at the higher time frame, it's also responding to a swap zone like that. Good. So even this level we've marked, it's also this level. And I like if you see that, so this level also. See, if you don't understand what I mean, check this out. So this touch, and then from here, and then a break, and then so this here, a break here, a clear break, and then touching above that level, and then break away. Okay. And you can see now, even the momentum is not as strong. So this shows it's a taking profits of basically this, taking profits of this bullish movement. So when you start buying, you cannot just buy all the way. You need to take some profits. The way they can take profits is by having from, if you're buying and you want to take profits from your buying trades, you need to show that you are basically selling. So when the market starts dropping, that is where you're gonna get a lot of money. Okay, so in this case, I'm expecting this momentum, since it's slowing down, to come back. Yeah, so we've mentioned that this is where this here is our demand zone. So this is our demand zone, so we can to buy. Okay, we're expecting to buy here. Okay, this is we're expecting to buy more opportunities. All right, we've mentioned that Jew. Obviously, if you're looking at GDP USD, is almost going to be the similar thing. I think we've marked this before on weekly. We've done some marking on weekly. Yeah. Okay. So let's change this from the candlesticks to line charts again. You can see this is where there was a break away. And we mark the low. We mark the low. We mark that level again. So we always remember, and you can see that. So we mark that as R1. So basically these levels, right? So you've got a lot of liquidity in that level. So you can see a lot of, when I say liquidity, I mean a lot of stop losses above that level. So what you saw as this, the market move. Remember, this is weekly, okay? So we're expecting the market to move from that level. It broke through. was the next level of what? Of supply, So we're expecting it. I'm expecting in that level why I'm looking at this candlesticks, my base. So I always look at the base. So remember, this was it touched this level, the market chart, and then it broke above this low. It's broke this low, and then from there was a drop. Okay, so this is exactly the base that actually made that move. So looking at left on this side again, that is where you're gonna expect another drop. So next week I'm expecting a bit of a drop on GDP USD, but it's gonna come back obviously to previous level of demand. It's basically taking profits from the buy next week, from the buy from last week. Okay, just do this. Yeah. So yeah. Okay, let me just use this again. The period separator. Yeah. Okay, we've mentioned that we need to obviously, this is Friday. This is Friday. This is Thursday. This is Wednesday. And yes. So okay, let's just use H4, mark properly the level. So this is okay. So this is where there's a bit of a change. So expecting in this level here. Okay, market to come back here to turn around or in that level over there. So these are some of the key levels that I'm marking. I'm expecting because these are some of the biggest in terms of demand zone. So I'm expecting buying opportunities in those levels. So firstly, obviously the market, what it's gonna do is my expectation, high probability. Okay. Okay. Is that it can definitely before dropping, move up and then make it drop. So I'm expecting those buy opportunities right here. Okay. So from here and from here, right? Those are some of my expectation on GDP USD. Okay. Yeah, let's just change this. Yeah. Okay. Yeah, I think it's clear when I use it daily. And a daily, this is a candlestick that I'm looking at. Okay. It's after this candles, you can see there was a huge. So that level 1.28604, that is my level. I'm expecting another bullish movement. And I like this here. Yeah, but we'll see. All right. Let's just take a look at gold, you know. Okay. Gold is at this level again. There was a reaction on that side. Let's change first this to line chart because that's where we definitely see where was the reaction, and the reaction was on this level, which is 1962, $1,962. And obviously, there's been a bullish movement from 1938 in terms of gold. So what you're gonna do is from this low, uh, the market move up to that level. So looking at the my 50 and 60 obviously is between these levels. So that's the critical level on gold, 1938 to 1933. So that's the critical level I'm looking at. This is basically where there is a buy demand zone. Whoa, what happened? Yeah, that's the level. 1938 to 1932, $1,038. So let's just delete that. Yeah, so let's change this to chart to candlesticks, and definitely it is that is basically our demand level. Sometimes, and you can see this is a bullish engulfing candlestick. So if you know your candles, you should know what is. So that is basically where you've got a huge buying momentum. So basically that is a level where potentially you see a lot of buying, and this is very nice. It's always so expecting this gold and gold to continue pushing up. Obviously, the reaction let's just change this. Change it again. Yeah. So looking at this. So after the whole movement, let's just change. Okay, you can see from here. And this is definitely where there was a bit of a breakaway, in terms of gold. So after movement, expecting gold to go to that level, the $2,000. And then I think by the 26th of July, that is basically where we might see a potential, remember, potential of reversing or breaking above, you know. So be on the lookout for gold. My expectation on gold is to do this, obviously come back. So I'm expecting gold, and you can see this here. This here, let me just show you what I'm looking at. I'm looking at this. I'm looking at these pins. Let me just show you. I'm looking at those pins as, see these pins, all these pins, touch, drop, touch, drop, touch, drop, touch, drop. I'm looking at that. These pins are some of the liquidity that's been trapped as the market has been dropping. And there's a lot of building up. So from that level, my expectation, let me just change this again to line. If I'm drawing that trend line, I'm expecting the market to do this. Just change candlesticks. So from those pins, one, two, three, and then all this drop, expecting the market to drop again, retest previous level, and then drop, go up towards that level. Then just before the Fed announced whether they are going to have a hike or not a hike, I'm definitely expecting it. That is where you can expect a drop from gold. But otherwise, if if the Fed is no hike, expecting the gold to continue going up. Okay. And then let's take a look at I think let's take a look at indices. I think a lot of people they've been asking Wong up is president, and a lot for me. And you can see Nasdaq is already shared. Let's change this. So we're changing this into so we're changing this, and you can see this is basically supply level. And we've marked this again. I always like to mark the highs and the lows. You can see I mark this level, okay, and I mark this level, and I'm this side always marking towards the left. So when the market reacts, for example, this reaction is based on this, see what I mean? So I like marking those level. So what I do next is I just do this, drop towards the left, and this here I mark this so I can see. Let's go in the daily, or let's change to candlesticks. You can see it's already reacting on this here. It's already reacting on that supply level. It's already reacting. And we've mentioned before that all this is very much important to note. The these candlesticks like your doji, like your pin bar, these are some of the candles that are crucial, okay? So the market has reacted on this candle. Okay, reacted. You can see there is a pin, and obviously let's go again. Let's use the 1 hour properties. Come on, show for separators. Okay, so this is our Friday. We saw it pulling back on Friday. So this is a pull back. And obviously it's been moving up. So this movement, not a huge momentum. And then on Friday we saw that movement. And this is Friday, Thursday, Wednesday, a huge movement. You know, I think this was a stop hunt on the market opening, but obviously the movement was this one here. This is Wednesday, this is Tuesday, and this is Monday. Okay, this is where the market opened. And so what I'm gonna do, let's move to H4. Okay. And you can see on H4, looking left in this level, you can see this is a very nice pattern. Okay, let me just show you what I mean. The market made the movement towards testing, you know, then coming back here, and then a drop, and then break a level. Okay, then after breaking level, coming back here, and then a continuous move up, right? Let's change candlestick so you can see. And let's remove this. Let's remove this. That. I need to learn the shortcuts of removing everything, you know? Yeah. So, basically, so this touch level coming back, and this almost similar level. You can see there's pin bars or these hammer, and there's then obviously buying, pushing up, coming back to the same level, then another buying momentum, then obviously drop. You can see 1, 2, 3. See, market touches level, 1, move up, come back, drop back to the similar level, you know. I like that. It's more like your head and shoulders, okay? Come back to a similar level, and the market move up, okay? After moving up, what I do is I change this, then I mark okay, I've marked the low. So now we're taking the Fibonacci, okay? Fibonacci is showing us this is a level, okay, because you need to look left. So this is the level where we need to looking at the market pulling back. Change candlesticks. And you can see even this candle, after this candle, this can see these small candles, it's where there was a lot of orders of buying. And this here, this doge coming back here, signify that this important level. So I'm expecting again a lot of buying momentum from here again in terms of Nasdaq. When the Nasdaq gets to this level, I'm expecting it again because this is indeed a demand level. Okay. So what I do, I mix fundamentals, my understanding of fundamentals plus my understanding of charts patterns, because I use the charts to enter, and I use the fundamentals to generate a trading idea. Okay. So when it's get here, expecting another buy, and you can see this is a very nice this is gonna be make a very nice swap zone, you know. If the market make that drop from there to this level, obviously you're more likely to see some reactions in these levels. So these levels are also critical, you know, reaction there, you know, another reaction here. So, but this is the one where I'm looking at the bigger reaction of Nasdaq. But let's take a look at what's going on a monthly. So monthly expecting it to create a new high. If all goes, you know, expecting it to create a new high to break here and create a new high. So, but you're gonna see, and you can see it's already here, expecting to create a new high. And you can see it has already broken this above these pins. So those pins are already broken. So now it is here, expecting to come back here and create that new high. All right. But firstly, my expectation is to come back to these levels. Okay, and then obviously, yeah, I think we've done this. Okay. What else? What other pair people normally look at? I think next week we're gonna be having CAD, something about CAD. Yeah. So my expectation on CAD is the same, let's just change this. Okay. So from there to there, I will mark the drop. So we're gonna drop that. So CAD should have some reaction around there. Around there. Okay. So CAD is already gonna react on this level. You know. Let's change it to a line chart. Expecting CAD to react and drop to this level. And this is another, this is another demand level, you know. So expecting CAD again to react and drop to that level. Okay. So expecting CAD to react on that. So all is gonna look left. So reacting on these levels, expecting CAD to react and then make it drop. This level here, this is your left, and this another level. Expecting CAD to react here, then go to that level and make that further drop. Okay, that further drop. Okay, further drop. Because my expectation on the dollar, I'll just change this template. My expectation on the dollar is, as much as we see that movement, like I've mentioned, let's change it to line chart. As much as I see that movement, I'm expecting the dollar to have a bit of a change when it gets to these levels. Okay, maybe the first level. Okay, okay. So this here, just notice the type of candlestick that I mark. Okay, so mark this level. So this is a level where I'm expecting the dollar to make a pullback. This is the level I'm expecting the dollar to make that pullback. Yes, it can pull back now towards that level, pull back, but this is where there was a lot of buying on that level. So that is where I'm expecting the dollar to have a bit of a buying, and yeah, this level here. So right now it reacted, yes, towards that level, but expecting to move up and then drop to that level. What else? AUD, USD. Okay. Oh, same thing again. Same thing. I think drop towards this level here. Notice that AUD is a commodity pair. Your AUD commodity pair, CAD commodity pair, NZD commodity pair. So those pairs, when you talk about JPY, we're talking about manufacturing, we talk about exports, imports, all those things. So if the gold is moving up, expect also most of the time AUD to move up. Okay. So my expectation can go up when the opening, and then this. So this is my expectation on AUD USD. So move up towards this level and then do this. That is my expectation on AUD USD. If you're changing this again to see the days, show period as separators, you know. Okay, so this is Friday, this is Thursday, this is Wednesday, this is Tuesday, this is Monday. Okay, Monday there was a drop. Can see that? Can you see what I mean? Market drop. The market made a drop while that week is gonna go up. This week I'm expecting to make a drop, and obviously in this level, that is where I'm expecting it to have a big, nice buying opportunity. This level here. Okay. So that is my expectation on AUDUSD. So while AUDUSD is dropping, obviously expecting Euro AUD to move up. Okay. Euro, they do a lot of manufacturing also, but they've got very good trading partners, which is good for them. In terms of the UK, in terms of China. Yeah, my expectation on this, let's just do this. I think we've done it in a daily. Because of these pins, I'm expecting them to trade above these pins. So which means my expectation on Euro AUD is for this pair to move towards that level. Okay. Come back and test this level. Okay. My expectation that obviously let's just change it to line. Okay. Expecting them. This is a very nice pattern they did here, but I'm still expecting them to move up from this movement, expecting them to move further up and then make that drop. When the AUD start moving up, that is where I'm expecting this to make that drop. So always watch the two pairs. Okay. And yeah. So chances are it's gonna drop up towards that level when it's making that drop. So it's all about you can swing trade, but make sure you move your stop loss to break even when you're doing your swing trade. Another reason that I'm looking at this is because of this thing here. See, first, then second. So this here, some people may call it a nice W. So that nice W is also, I can call it a building up of number one, S1, support level number one, this side, and then support level number two. Okay, support level number two. Okay, so this means the market chances are it's definitely gonna move. It can react and move to this level like this, and then go up, this level, and then make that drop. Okay. Why I'm saying this is a nice W because of this movement here. If you cannot see it, let me just show you. Because the price made a drop here and it just went up that level and then made another drop and then just continue moving up. Okay. But for you to see it clearly, always you can always use the line charts. You know, you see a touch here, then a touch here, and expecting the touch over there, and then a drop towards the similar level here, which is this level here. Okay. And then obviously this is Euro AUD. I think one we haven't touched on. What else we haven't touched? Is it NZD Euro? NZD they move almost similar way with you know Euro NZD, expecting the same thing as Euro AUD. You can see here, hey, there was a huge selling, huge selling. So right now it's here in the middle, okay? So first thing I do is we mark the low, the high, and we mark the low. Expect here, because this is a base, expect here a bit of a reaction, okay? Expect a bit of a reaction there, and expecting another reaction on that level, okay? Another reaction on that level, okay? And this movement is a bit of a compression, so chances are it's going to react on that level, and it just changes line, okay? Okay, it's expecting a drop, yeah, and then further movement to the upside, which will be here, and then a bit of a drop from that side, okay? Because we mentioned that as NZD USD is moving down, I'm expecting this also to move further up, okay? Yeah. Those are some of the expectation on this side. What else we haven't checked out? I think we haven't checked out USD JPY. What has been happening here? It has been dropping. So I like the fact that, after that candle, this is a candle where you saw a market breaking away. I think if you go and check out the weekly, you can see that there was a reaction there on the USD JPY. This is our supply zone Y. You can see here there was a huge drop. That huge drop signified that there was a lot of supply of the dollar or against the yen. And obviously the cooling off of inflation also made that move even further down. So it dropped. And you can see now that USD JPY is here in a sub zone. Sub zone is where you had the market that has been trending, for example, show you. That says resistance, resistance, resistance. So the price drop, touch, drop, come back, touch level again, drop. So now the market is here. This is a high liquidity zone. So my expectation on USD JPY is for it to move this way. Okay. For it to move this way. And then obviously continue with the drop. So it would create something like an M. So from there into this better drop. So we want to see it dropping further. Yeah, further to this level. Yeah. I think I've marked it properly on the USD index. So that's the level I'm expecting to see. Better drop towards this level. Okay. But we'll see the numbers. We also check out. So this level is where are we gonna be having a hike in interest rates or not? Then we can see if it's gonna continue further dropping. Okay, because of this 1, 2. This is first time back, drop, first time back, moving up, then drop, because when there was a huge drop, chances are the market will come back to that level and react to it. So expecting another huge drop, which is definitely retesting these levels, then dropping. So while this is happening, expect you while the US JPY is moving up, expect Euro USD to drop, gold to drop, and then obviously then that drop. Okay. So that's my analysis on Euro. Okay. What else? We take a look at DAX. It's the same thing also. Same thing. A drop. I think we've done analysis on this before. Okay. So it's relating to that. So expecting same thing also. You know. This year. Okay. So expecting this to come back here. But it should definitely break that level. On the weekly, yeah, it's gonna create also. I think DAX is also. Let me just take take a look at the monthly. Yeah, it should create a new high, possible, but we'll see. We'll monetize as the week progresses. Okay, and you can see, obviously, there's gonna be a reaction on that level because that is a supply level. So before that, might just do this, then it drop. And this is where you see a lot of buying opportunities. Okay. Yeah, that is all for me. That is what I have for this week. Otherwise, look out for my Telegram channel. Look out for subscribe to the channel on YouTube and make sure you can get in touch with me with my WhatsApp number. 078 888747. My email is presidentwonga@gmail.com. I'm also on TikTok now as President Wonga, Mr. President Wonga on TikTok, Mr. President Wonga on Instagram, and Mr. Press Wonga 7 at on Twitter. Yeah. Otherwise, all the best for the week. Trade well, trade safe. Remember, the key is the risk management and trade management. Always move a stop loss to break even once you are in profits, so you can hold and swing. And yeah, that is all I had for the week.